Good morning, everybody. This is Kathy Elkins with Premier Marketing. Welcome. Happy June 3rd. Wanted to welcome you to our webinar that we have planned today with Sagicor Life, going over their WealthCare Index Single Premium Universal Life Insurance Plan. Very excited for this. I hope you guys are on the edge of your seats during the whole webinar. Any questions that you have, please make sure you list them in the question box. That way we can ask them during the event or after the event. I have Corey Martin from Sagicor, and he's a regional sales manager with Sagicor, and I also have Chris Veal with us, and she's internal sales specialist. Good morning, Corey. Good morning, Chris. How are you doing today?
Kathy, good morning to you. Great to be with you all. Thank you for having us.
Wonderful. Well, Corey, I'm just going to let you go ahead and take off and start your information with us, because I know everybody's got a busy day ahead of them. And
you bet.
So why don't you just get everything started on this? Okay.
Sounds great, Kathy. Thanks again for having us. We're thrilled to be here. So thanks so much. Again, my name's Corey Martin. I'm the regional sales manager with Sagicor down here in the Dallas-Fort Worth area. Thrilled to be with you all this morning. We've rolled out our WealthCare Index Single Premium Universal Life product. Soft launched in December, hard launch on January 1st. And so what I'd like to spend some time with you all today on is really the detail of the product itself, but we're going to show you where we're having success selling this. And that means from the standpoint of working to understand the mindset and concerns of pre-retirees and post-retirees, which is our target market for this specific product. More importantly, where to find the money. These products are certainly of interest to the population at large for a number of different reasons, and we're going to touch on those. But more importantly, where to find the money, why it's an efficient instrument, not only for wealth transfer, but the potential for being a source of funds for chronic illness as well. So excited to share this detail and this information from you, the detail we're getting back from the marketplace. So let's go ahead and dive in. So this growing opportunity, 10,000 baby boomers, as we know, are turning age 65 every day. Most are unprepared, don't really know where healthcare expense costs are going to come from. Extended care costs, a lot of times, are not even on their minds. And quite frankly, a lot of affairs are not in order. But again, baby boomers are turning age 65 every day, and millions are out there needing help, needing guidance, and that's exactly where we come in. So nearly half of one out of two are worried about not only outliving their retirement savings, but their primary financial concerns, and again, in order here, are healthcare related costs. Where in the world are we going to get those funds to pay for health related costs? 77% are certainly interested in where those funds are going to come from. As we've really, the beginning of this year, who would have thought market fluctuations, 53% are concerned about what's going to happen in the market and what in turn is going to happen to their income and their nest eggs. 50% just unexpected costs, things that'll pop up during the course of their retirement they may have not expected. Lifestyle changes, what's that going to look like for them once they've transitioned to what they would consider to be a normal retirement. Being a financial burden to somebody, 22%. So again, these are the concerns of every pre-retiree and retiree that you will encounter as you're out conducting your day-to-day operations. And then 21% want to be sure that they have money left over to pass on to their heirs, to designate to their beneficiaries. So how do we do that? It looks like 67% of boomers haven't really taken any steps to protect themselves if they suffer diminished capacity or some kind of dementia. So what does that look like to them? What again, what are the facts and statistics of what we're seeing? 10% of Americans age 65 and over have Alzheimer's. My wife dealt with her grandparents. It's not a conversation, not a topic that is comfortable. But again, these are conversations that we need to be having with our clients. We need to make them uncomfortable. We need to have these conversations, and really that's part of what we do. Again, is making sure that we shake people up and make them see exactly what is happening. 45% of Alzheimer's patients are aged 75 to 84. So what that means, what that really means, and what with the feedback that we've got from the marketplace is this is if you are age 65, you have a 1 in 10 chance of having Alzheimer's or having some kind of diminished capacity. Planning is of utmost importance because those numbers again go up, and these are chronic conditions that typically don't get better. So again, plan now, plan while you're a pre-retiree, while you're age 65, plan early. The average need for care, 5.5 to 6.5 years. So again, these conditions don't typically get better. So it's important to not only understand that the mindset there. These are concerns for your clients that are pre and post retirees. So also chronic illness. Source of funds for chronic illness is going to become a more and more prevalent issue. More and more people are dealing with chronic disease, and frankly, big pharma are developing drugs and prescription medications to treat these conditions. So 40% of adults have at least 2 or more of these conditions that are listed here. But frankly, the detail and it's really, you can live longer with any of these conditions because of medications that are being developed. So that's part of our planning desire, is making sure that we have money available for the long term, because frankly, even cancer is no longer a death sentence. There are medications that are being developed to increase our longevity. So let's talk through real briefly, now that we understand a little bit of the mindset and some of the concerns and where the opportunity is for some of these conversations to begin. Client conversation starters, who would assist you with your care needs? That is at a basis, that's a terrific question to ask everyone that you engage with. Where would and who would assist you with your care needs? And so just some of the detail, 1 of 3 retirees are regularly helping take care of a loved one, meaning that grandparents are actively engaged in helping take care of children, take care of young children, while both families work. So they depend on their young loved ones and the families at large. A lot of times, my mother moved to Denton, Texas, just up the street from where I live, to help us with our 4 kids. And so again, retirees are being counted on more than ever. So again, keeping in mind that 55% of parents expect their children to care for them. So you know what, asking those questions, you may get you may get answers that, you know what, parents expect their children to take care of them. That's the mentality of a lot of pre-retirees and post-retirees. Interestingly enough, a lot of those children may not know that they are in fact being counted on to care for those adult parents. And another fact is that women are more likely to need care and become caregivers, which means that, women, as we know, are living longer than men. So women are a terrific conversation starter as far as where is the need for care going to come from? Where are those funds going to come from? and who are those caregivers going to be. My wife is the oldest child in her family and has been designated as the future caregiver for her mother, who's still living. So again, those are conversations, and just from an understanding perspective, this is what is expected in the marketplace. This is a great, I'm going to give you a website, and the reason why is the growing opportunity of what does care cost in various parts of the country. The American Council for Aging is a great website to visit. Google American Council for Aging, and you can actually go to their website, and you can, wherever you happen to be in the United States, type in your specific zip code, or the zip code of anyone that you happen to engage across the country. If you have clients in Illinois, Nebraska, California, wherever they happen to be, you can actually pull up on the American Council for Aging's website what the specific cost of care is in that area. A lot of times when you do that, your clients will be absolutely staggered by the amount that in that specific zip code, if that's where they plan on retire or in fact are retired, what the cost of care in that specific area can be. Again, anywhere from $54,000 up to $365,000 a year in some places in California and New York. In the Dallas-Fort Worth area, I was absolutely floored to find out how much care costs in my area where my mother is. So again, that can be a nice conversation starter of just, do you know what care costs in your area should this occur? And how are you prepared to pay for that? So another source of funds, again, as we talk about source of funds, where is this money coming from to fund these solutions that we're going to provide? Where is the money? Well, $19 trillion is quote sitting on the sidelines, and that means just something in cash, money market funds, equivalents, short-term bond funds. This comes again from Market Watch, just within the last year. So again, as we talk about where the money is, it is absolutely sitting on the sideline in some type of short-term, liquid, short yield, small yield account somewhere. And I'll give you a perfect example. In the shale here in Texas, which the towns like Seguin, Hondo, Kerrville down here in South Texas, there is a tremendous amount of money changing hands with shale fracking that's going on down here. What we've seen are banks and lending institutions popping up on just about every street corner, because literally people that don't know where to put the money that is flowing from some of these fracking established yields, the people are dropping $100,000, $200,000, $300,000 on family-owned property that's been in their family forever and ever, and they are literally putting it in money market accounts. CD money is flowing into some of these banks that have popped up in some of these small towns, because people literally don't know where else to put that money. So again, knowing the source of funds and where that money is derived from, we are finding about 80% of the money that's coming in to fund these single premium life contracts is from money that is in fact on the sidelines. So knowing what the goal is for the money that's been set aside by your clients, what are the goals for those dollars? What are you planning to do with the $100,000, $200,000, $300,000, $400,000 worth of money that you've got sitting in these low yield, taxable, in a lot of again, money that will go into probate at some point? What are your goals for those dollars? Knowing what the goal is will help determine what the solution is. So a lot of times what we find are guarantees. The clients have put money in a CD because they view that as a low risk instrument. They view that as a low risk investment, if you will. So why WealthCare? Well, we've addressed the lifetime guaranteed death benefit. Your money is guaranteed to be there. You're also guaranteed a return of premium with this contract, WealthCare. So again, we've addressed that concern. If your goal is to in fact have access to funds, guess what? Penalty-free return of premium on our contract as well. So you've again, as you check goals off, as you check boxes off of what those goals of that money that you've set aside are, chances are we can take care of that with what we've developed with WealthCare. Growth. So again, clients want the best of all worlds, right? So what we've done with WealthCare is, yes, we do have growth potential, growth opportunities, and we're going to talk about what specifically those are. But a choice of strategies with downside protection. So I want to be able to participate in the market when it's positive, but not have to worry about erosion of principal if it's not. So zero is still my hero with these products, with this contract, with a 0% floor as well. So again, if protection from health-related risk is my goal, I want to keep that money safe and secure, knowing that I'll likely need that at some point to take care of any kind of health-related risk, malady that may occur. Well, what we've done is we've added chronic illness and terminal illness with no additional cost or underwriting. So literally, I could take $100,000, and we're going to show you a case study here in just a second. I can take $100,000, buy up, leverage a death benefit of potentially $250,000, and be able to use that death benefit or a portion of that death benefit as that chronic benefit, as that pool of funds to take care of me and any health-related risks that may occur in the future. And then legacy. Let's not overlook legacy from the standpoint of a lot of times CD money is just meant for the next generation. That is the ultimate inefficient instrument, if you will. Just doing some quick calculations from if you don't know what the average probate is, and probate is just the verification of money and the verification of will to where those funds are going to end up eventually. The average probate takes 24 months. So when CD money or money market accounts, once those are identified and put into probate, it can take up to 24 months to get that money where it needs to go. Whereas if you utilizing life insurance as that delivery vehicle, you can specify beneficiaries, you can control where that money goes. The average death claims are between 14 days and 35 days. So again, that money gets where it needs to go, not only quickly, but much more efficiently and on a leveraged basis. So again, a very tax-free or a tax-efficient way to transfer wealth. So having known all of that, let's talk through, and this is actually a case study that we developed. This is a 65-year-old couple, Bob and Maria, recently retired, preferred non-tobacco. And again, as we talk through this, preferred non-tobacco is how this product is designed to be sold. So preferred non-tobacco includes preferred risk all the way to table 4 risk. So again, that preferred class is something that you should be illustrating because most will qualify. In this specific case, I've got $1.3 million of liquid assets, and we've determined that their financial needs are ensuring that each spouse is financially taken care of if the other's not there, securing additional protection for future health-related chronic risks, and then maintaining asset control, making sure that I still have control of where that money is and how it's used. So Bob specifically, what we've done, we've taken this $100,000 in cash and we've guaranteed a end of year death benefit if Bob happens to pass away in that first year of $211,000 on a guaranteed basis. And if we allocate it properly, a current death benefit of $214,000, which again, what we've done is we've taken perhaps CD money and turned it into a federally income tax-free death benefit that's available at the immediately. At the end of year 20, you've got a guaranteed death benefit of $166,000 and a current death benefit of $241,000. So the beauty of utilizing a product like our single premium IUL WealthCare is that we can not only leverage the death benefit from year one, but also leverage the death benefit moving forward. So depending on how we allocate those funds in our index strategies, which we'll talk through here in just a second, that death benefit will continue to grow. And as that death benefit continues to grow, that pool of funds will continue to grow as well. So we'll have more money available the longer we keep this contract in place. And then again, if Bob cancels, even at the end of day one, $100,000, his initial deposit is available to him. At the end of year 20, if Bob opts out, decides that, you know what, this is not for me, $185,000 on a current basis comes back to Bob at that point. So let's talk about what happens if Bob happens to need care. Bob has access to income tax-free dollars via our chronic illness benefit. At the end of year one, he would have access to nearly $4,000 a month for 48 months, a total of $189,000 that Bob can draw and utilize for care in any way, shape, or form, as long as he is unable to perform 2 of 6 ADLs, which is what we show as chronic as a chronic illness trigger. Without assistance, he'll get $4,000 a month for 48 months. What the benefit is we leave $25,000 as the death benefit. So it's the larger of $500,000 if the benefit is larger than $500,000, $500,000 being the cap, or the death benefit minus $25,000. And the reason we leave $25,000 available is that a death benefit is paid, so it maintains an ability to again consistently deliver a life insurance benefit at the end of the contract upon Bob's death, so we maintain that tax-free benefit. At the end of year 20, as you'll see, $4,551 for 48 months is available. So that, again, as that death benefit grows, that chronic illness payment will continue to grow as well. So Maria, from the standpoint of what's available for her, again, showing that there's leverage here. At the end of year one, you've created a $235,000 death benefit if something happens to Maria in the first year of the contract. Also, return of premium, $100,000 comes back to her if she decides at the end of day one that she wants to opt out of the contract. So again, little risk for Maria. And again, just showing the significance of the income benefit. And again, keeping in mind that WealthCare is not a reimbursement product. So this is an indemnity contract that is paid out. You can use this $4,300 a month, $4,900 a month, whatever that benefit happens to be, however the family sees fit. So let's talk about the growth opportunities. And the unique thing about this contract is we offer multiple strategies for growth here. And if you pay attention on the bottom of the screen to the higher growth potential of our high cap and high par strategies, for a 1% annual account value charge, so the allocation comes out of, that expense comes out of the cash value of the contract, 12% S&P cap, and an 80% GMI or global multi-index high par strategy, we are finding about 70 cents of every dollar that comes into Sagicor is being allocated to that high cap and high par strategy. And why is that? Well, because of leverage. People want to know that, you know what, I want to be able to grow this over my life expectancy. If I'm 65 years old, I likely could live another 18 to 20 years. That's a lot of runway. If you believe that the market will continue to go up, you can participate in that positive growth by utilizing a high cap and high par strategy, and make the decision to change from one to the other or included both on a 12-month point to point. However, if you prefer not to pay for that opportunity, our 8% S&P cap and 65 global strategy can help with those growth opportunities as well. So your client has a number of allocation options that they can choose from. So again, that growth potential is linked to market performance. So what we've done is the S&P 500, let's be honest, that's a strategy that won't go away. Everybody knows what the S&P strategy is. It's trackable. They can track what the S&P is currently doing. And again, that's a very straightforward strategy. We see a lot of our global multi-index strategy. So basically what we've done is we've created an index where the 50% of that money is allocated to the S&P, 30% is allocated to Euro Stock 50, and 20% to the Hang Seng. So if you have clients that prefer more of a global strategy, we do have that option. So either or, whatever your client's preference happens to be. So again, let's just talk real quickly about what's different about WealthCare compared to some of our competitors in the marketplace. Reimbursement long-term care and indemnity long-term care are different, very different animals, and it's important to understand those differences. As you talk about indemnity, again, with the proof of claim, as with WealthCare, that money goes where your client needs it. No proof. Again, you don't have to send us receipts. We don't. We're not worried and concerned about where that money is going to be spent. It's for whatever's best for the family. In a reimbursement plan, the last thing that people want to be concerned with is where those receipts are for any travel, for anything related to care. Not to mention that additional underwriting requirements can apply. And boy, oh boy, if you ever have to get into licensing and continuing ed requirements for some of those reimbursement plans, the cost of entry is significant. So let's take a 30,000 foot view of where this product fits in the marketplace. Our preferred class, again, is how this product is meant to be sold, ages 18, which is from the detail that I've seen in the marketplace, is the lowest issue age of any company that I've seen, not to mention age 85 on the upper end. So again, a lot of bandwidth, a lot of opportunity for where your clients can be plugged in. Guaranteed return of premium from day one. Again, that's a huge factor of why wouldn't I want to do this? Your money is not at risk. Lifetime guaranteed death benefits. Again, upside potential. Policies guaranteed not to lapse as long as there's no indebtedness. Again, it's a leverage play. Not only is it a legacy play, but it can be a pool of funds to set aside for chronic illness. And then accredited interest rate bonus. Beginning in year 11, when you run our illustrations, you'll see a 50 basis point bonus that's paid in starting in year 11, which again increases the opportunity for upside in the later out years of the contract. So what's important to know about our accelerated benefit rider and for chronic illness? No separate underwriting. and no additional cost for that rider. So as I mentioned, the maximum accelerated benefit is $500,000, or the death benefit minus $25,000. Again, just to make sure that there is a death benefit paid, so it maintains the integrity of a life insurance contract. Our chronic trigger, the inability to perform 2 of 6 ADLs, which are bathing, eating, dressing, toileting, and continence and transfer, and severe cognitive impairment, which is a new addition for us. And then again, a terminal trigger is a 12 months or less to live, and that benefit is paid as a lump sum. So again, delivering money when it's needed, as it's needed to your clients. Let's talk about the underwriting process. This is one of the best benefits that we provide is fast and easy application process. This is an e-application only application, an e-application process. And I've got Chris Veal on the line with us. She's my internal sales specialist. She's going to run us through how to run an illustration real quick as well. So I want you to see what the software looks like and just how easy it is to get an application, not only get an application started, but to produce an illustration and show what you want to show when you want to show it. And as a matter of fact, we'll have you ready to go by the end of this call. So again, our preferred, we underwrite these policies as net amount at risk. So the net amount at risk being the difference between the deposit, let's say a 75-year-old at $100,000 deposit, we would underwrite whatever the difference between the death benefit and the initial deposit happens to be. So for somebody up to age 65, as long as that number is $300,000 or less, we will proceed at a preferred underwriting class and with ACCELEWRITING, which means no telephone interview, no paramed exam. Your client won't be put through those senior supplements. A lot of contracts in this marketplace have some type of maybe a get up and go where they've actually got to perform, some kind of get up and walk across the room type of exam. We don't require any of that. So again, no telephone interviews and no senior supplements will be required. Fast and easy claim process. This is again another piece of the pie for us. Your client has access to cash within a 90-day elimination period. Again, the inability to complete the 2 of 6 ADLs. Those benefits are income tax free. The process for claim is 2 pages, very simple. Doctor's signature, and off we go. But you'll never have to submit any medical receipts for reimbursement. Client can spend the money however they choose. So let's talk real quickly about how to identify prospects. Knowing that about, again, 70, 80% of the clients that we see and the money that is coming in the door are people with cash on the sidelines. People with cash on the sidelines are absolutely prospects. Now, I used to sell a lot of annuities back in the day, and one of the questions that we used to ask when we were looking for cash on the sidelines is we would ask one question: Mr. or Mrs. Johnson, are you happy with the rates of return on your CDs? And asking that one question uncovered more opportunity and more emotional response than you can absolutely imagine. People buy CDs because they're because banks are popping up on every street corner and they don't know any better. So having yields of less than 1 on a CD is not something positive that most people want to talk about, but they do it because, again, they view it as safe money. So people with cash on the sidelines are easily our best prospects. The other thing that we're starting to see more and more of are people with existing cash value life insurance contracts that may have been purchased previously but don't include a chronic illness benefit. A lot of those contracts are still out there. whether they're old VULs, old ULs, old whole life contracts, whatever the case might be, if upon policy reviews, you find products that were bought previously that don't include a chronic illness benefit, it may be a conversation to talk about the 1035 section of the tax code that allows you to roll those dollars into a like insurance contract. And WealthCare, again, could potentially be that solution. We are finding a lot of money in old cash value life insurance contracts that don't include access for chronic illness. Certainly couples that want to protect each other's retirement security. Again, those are questions that need to be asked. Couples with significant age differences as well are prospects for these conversations. These, again, just knowing that the pool of money, where is that going to come from? If, for example, the male or female is significantly older than their spouse, that's a conversation of, okay, where is that money going to come from? Even single and divorced clients, again, just having conversations in general about where's the money going to come from, alluding back to the cost of care and what the significance of that cost of care can be. So just starting a conversation, asking your clients what concerns them about their retirement future. What are those concerns? And again, just asking open-ended questions like that, I've always found to be very productive. Just talking about concerns, talking about their future. What do they see? What do they envision? And how do they envision it? Anyone that has and this is a lot of folks in the marketplace today. Anyone who has been a caregiver or knows anyone who has needed care. Those are, again, conversations that need to be had, that need to be understood, and also the fact that many children are, again, beneficiaries are planning to be those adults and those retirees are planning for their kids to take care of them. Have they planned for that? Have they had those conversations? That's where you can be the facilitator in a lot of those cases, and we found that absolutely to be the case. And then again, just asking if they've got a plan for care, and asking if they want to still control those dollars, but have the possibility and the potential for leverage to create more income, more leverage, more access to cash as we move forward. So 5 key points to remember that WealthCare can address multiple client needs. We've gone through some of those client needs. Again, legacy, I want to make sure that this money gets to where it needs to go. WealthCare can be a very efficient delivery vehicle. Liquidity, I've got access to my cash. I've got access to my cash just as if I would a CD or some other type of account, but I've also got living benefits. So I've got the multiple sources of cash, multiple sources of benefit, simple application process and claims process. No health or LTC license is required, so none of you need to have any special licensing to get this started. And then knowing that $19 trillion is sitting on the sidelines waiting for somebody to come and get me. So hopefully we've given you some tools here for not only talking points, but what's on clients' minds, what's on your clients' minds. As far as care, as far as income, as far as legacy and liquidity. Hopefully that's a tool that you can, this is a tool that you can use moving forward. I'm available. Chris Veal, my internal sales specialist, is available as well. And certainly our friend Kathy at Premier is available for you as well to create additional training opportunities should you want to do more deep dive into this product or others with Sagicor. We're happy to help you. With that said, I want to be respectful of everybody's time, but I do want to turn the ball over to Chris Veal, my internal sales specialist, to show you how to get access to our software, how to get access to our website. We have created a microsite here, SagicorProducer.com. So if you visit SagicorProducer.com, you can take advantage of what is available there on our website. Take advantage of that today, and Chris is going to take it from here to show you exactly how to run an illustration and get access to what you may need today. Thanks so much for your time.
Good morning, everyone. Let's see here. So I wanted to just take you first to that SagicorProducer.com web page. Okay, so what I've done is I've logged into the producer portal from my landing page, and now I can simply just hover Sales Tools, click on Illustration/eApp, or come down and start application, which is going to lead me into the illustration software. Once I'm in, I'm ready to go. I've got create new illustration on the landing page. I'm ready to just start entering the information that I need. So the line of business I just spoke about, I'm going to start there. We've got an option for life or annuity. So I'm going to leave it at life. My product type, again, I'm going to choose universal life here for that WealthCare product. And then the jurisdiction field that I spoke about is here as well. So you want to select the correct jurisdiction. And then after we've got those parameters set, we're going to come down, select a product name, Sagicor WealthCare, and then I'm ready to go. So you'll notice my screen has changed. I've got two different tabs. I'm on the insured tab, I've got a plan tab, and then my allocations. So as the agent, I'm just going to start building out this illustration for my client. I kept him at age 55. That policy benefit age right here, that 70 years, this is 15 years out. So if you see a red circle here, that might mean you need to adjust that so that it's at least 10 years out from the issue age for the client. That's just going to show a quick summary on the illustration that I'll show you, the illustration report. Here are your risk classifications. We're just going to select preferred non-tobacco. Now I can navigate to the next screen using the arrow at the bottom or the plan tab at the top here. I'm going to choose plan. We're going to solve for face amount. I do have an option to solve for premium. So we got a client has a specific face amount that they're looking for. They want to know what that single premium amount will be. Just flip it over to solve for premium. I'm going to leave it at solve for face amount. We're going to input the 150,000. And I was just mentioning over to the left right-hand side of my screen here that the summary values are calculating as I'm inputting me. So I can see the total single premium amount, 150,000, and there's my minimum guaranteed death benefit of 321,429. Furthermore, on down, I get the first year death benefit as well. It's shown at 440,416. So I got my guaranteed death benefit, minimum guarantee, and then I've got the current year, first year death benefit available. If there's no 1035 exchange, I don't need to complete these fields. Of course, if there is, we just answer yes. That opens up the 1035 exchange fields, and you can input that 1035 exchange amount there. Next step would be to move on to the next page, which is our allocations. And Corey had spoken about the index strategies that are available for the client. For this illustration, I'm going to leave mine 100% in that index bonus strategy. And then we're going to run a report. Over to the left-hand side, now that I have my illustration completed, I can just simply click Reports. On the next screen, I'm going to click the box next to the product, and then I'm going to hit Create and Preview Reports. Very simple. And then you will see here just momentarily the illustration report. So here we go, just on down, gives you a complete summary of what this product looks like. There's your face amount, the 321,429, that's your minimum guaranteed death benefit. Got the single premium amount there. I'm going to go ahead and scroll on past. You'll see some charts on the strategies that are available. And then that policy benefit age that we talked about on the illustration. Here's a snapshot of what this policy looks like for this 55-year-old male at age 70. So you'll see here his income tax death benefit is $384,792. He's got a cash surrender value of $203,938, and then an accelerated benefit amount of $359,792. That's that portion of chronic illness that he can accelerate should he become unable to perform 2 of his 6 ADLs. Furthermore, on down in the illustration, we do summarize that. We give you a summary of values available, and then that chronic illness benefit also illustrates for your client so that they can see from year to year, as soon as I get there, from year to year, what that chronic illness benefit is going to look like. And that's going to be a part of every illustration that you run. So here's the chronic illness. It's going to summarize those benefits. That's a monthly chronic illness benefit, year 1, all the way down to year 20 and further. But let's just take a look at what it looks like at year 20. So there's that $8,152 chronic illness death benefit. There's the bare minimum. You know, should there not be any growth and we're staying at the 321 throughout this entire policy, the client qualifies at that guaranteed value monthly chronic illness of $6,176. Okay, so that is the illustration piece. Once I'm completed, because Corey did mention that this is e-app only, I do want to just show you what it looks like to launch right in from the illustration to the application. First thing I need to do is save my illustration. That's going to be very important to launching into an e-application. All right, so I'm just going to hit save here. Once I've saved my illustration and I'm ready to go to an application, over to the left-hand side of my screen, at the very bottom, I see application. I simply click there, create application, and this is going to launch me directly into the Firelight software and into the e-application to get. And this is what the e-app, very simple process. We're going through and just filling out data and information. I did go ahead and complete a full application here that I can show you. Once I've completed my data entry on an application, I get to 100%, and I'm ready to move on to signature. So I really like the e-application because you can't jump from one section to another, which really really helps the agent get this application submitted in good order every time. All the forms, all the additional medical questionnaires that might come up or that might be needed due to the agent answering or the client answering yes questions to the medical questions, all those forms will auto-populate into the e-application for you. I'm not going to spend a lot of time on that, so I'm going to throw it back to you, Corey, if there are any comments, any questions in that chat.
No, that's great. Okay. Chris, thank you very much. We just, our goal this morning was to give you some detail, give you some information about this marketplace, and to show you how easy it is to transition into turning that into new business. So knowing where the money comes from, how to start a preliminary conversation, that was really our goal this morning. If we have grabbed your attention, we'd be more than happy to schedule a follow-up call to get into more detail, to get into more specifics with you, but just really wanted to take a 30,000 square foot view of this marketplace, of the opportunity. And with that, Kathy, thanks so much for allowing us to come and present to your teams this morning, and we look forward to talking with you all in the very near future.
Hey, thanks everybody, I appreciate it. If anyone has any questions, please feel free to call us, 800-365-8208, team extension is 607. We'll help you make sure you get the contracting going, help you with any questions that you do have. And as mentioned, yeah, if you guys could help with additional training, all the agents will love to hear that. So that's wonderful.
Absolutely.
Thanks, everybody.
Absolutely.
Yep.
We'll talk to you soon.
All right. Thanks a lot. Take care. Have a great day.